And now the question comes. Cool, Greco, you explained me passive and aggressive entry models, but how do I find any ways to understand the setup and find the setup? How can I read momentum? And I will show that. Just listen closely. It is easier than you think. And again, simplicity is key in trading. Let me draw something. What's this? It's uptrend, right? And this as well. And that one, it's also an uptrend. But what about this one? It's still an uptrend, but it's a ranging or volatile uptrend, or even in different words, a manipulated uptrend. Why I show you this is because you need to understand there are not only passive and aggressive entries. Let's make like this, entries. There as well, I call it the healthy and unhealthy trends. An healthy trend is something like this. Without breaking previous internal structures, we talked about it in the first few videos. And internal structures are where? Here. And if you don't break them, if you respect them, if you respect the demand or the supply zone, it's for me a healthy trend. What's an unhealthy trend? An unhealthy trend is basically when you're taking out internal structures where people would say, it's a breakout structure, we can shift short. And then they go short and they're just getting stopped out immediately. Let me draw this for the bearish scenario as well, so you understand. Okay. Healthy downtrend. Unhealthy downtrend or manipulated. This one can also go like this. It's still fine as long as we don't break any internal structures. But in this one, you're breaking this structure point here, you're breaking that structure point there, and another one. Even if it's like that, it's still unhealthy. Why do I say this? Because on each way or in each scenario, you should behave differently. Okay? What do I mean with that? When you spot a healthy trend, doesn't matter in which direction, you can find entries in the previous key areas. Means, let me draw it a little bit bigger for you. Okay? When you're, for example, spotting this, and let's say we are here, we don't know that this will happen. What did I tell you? You guys have to look back to the higher time frame zones to see how strong the move is. Do you see full big candles, or do you see many smaller candles but still in the same trend? If it's huge, big candles, you can take the aggressive entry points right here. But when you see it's moving slow and then it's breaking structure, you should know the key areas are here. Some people say enter straight in the fair value gap, but that's too early. It's better to miss a trade than to enter a trade and get stopped out. Okay, so always, doesn't matter how you want to enter, keep in mind or ask yourself, am I entering too early? It's also important to ask yourself the following question. Let me draw something. First, how strong is the move right now? In addition, we could say in a higher time frame. Doesn't mean daily. If you're trading 1 minute or 5 minutes, it can also be the 1 hour candle. Okay, like that. The second one, key area points. Where are the previous key area points? And did we broke them or test them? And with the second question, if you're smart and you know what I'm talking about, you will know we are right now talking about the healthy and unhealthy trades. Yeah? And did we broke them or test them? If we test them, it means we didn't broke them, and that means we are in a healthy trend. If we broke them, we are ranging. The volatility is maybe crazy, but that means it's an unhealthy trend. Unhealthy is just a different word for dangerous. Okay? A healthy trend you can easily predict, as I showed you in many trades before. But as well, there were some unhealthy, dangerous trends. And we will discover them on the charts I will show you right now. So let's go to the charts. Okay, let's go to a lower time frame. Let's say 10 minutes. Okay, look. What do we see here right now? What I mean is, these are healthy trends. These are unhealthy trends, yeah. Choppy, it's ranging. Healthy trends. It is easily to read them. And just enter when the price touches either the supply or demand zone, or support resistance, whatever you call it, but the internal ones, not the main ones. It's always internal ones. Let's say here, when you're in this candle, or when you're looking at the chart right here, where are the next few zones? Around here. And this is 10 minutes. So in 1 minute, this candle looks like that. And you could easily enter around here. And if you miss that one, you could enter here or here. You see many positions, and these are 10-minute candles. So imagine how it looks like in the 1 minute. So what do we do now? Normally, as always, we should follow the trend, right? Right. But now, what I have to do is always look to the past. You need to see where you are, because the past is connected with the present moment. And the future depends on the present moment. So that means, let me draw this. This is the past. What happened? This is the now, right now. And this is the future. Okay? And obviously the past is connected and has to do and has an impact to the now, to the today. If you had a key all-time high point in the future, in the past, 5 years ago, 2 years ago, whatever, and we are today in this area, it has 100% an impact to the price action of today because we are right now in this area. But what about the future? The future depends on the now, because today is either creating or destroying the momentum for tomorrow or for the next second, the next minute, the next hour, okay? And that means the future is connected to the now, but as well to the past. Not 100%, obviously, yeah, you need to think logically. But a few percentage, yeah, we don't know, we can't say how much, but it is connected. So, and that's why I always need to look where we are. You know, I'm never just looking straight to this and making a huge trade. Obviously, when it's a small trade, easy, yeah, for the price action, because as you saw, it's easy to read the price action. Just look at the key zones, understand how a trend is building up, yeah. A lot of people, what I learned on YouTube was always, I don't know what's it called, consolidation, manipulation, trend. Bro, fuck that shit, bro. Yeah, that's a language for little kids. And then again, consolidation, manipulation, and trend. Bro, with that, you don't understand why something is happening. You say, oh, manipulation, bro, but in which direction? It could also manipulate around this and go back and again up. Yeah. So you guys should forget stuff like that and just look for multiple time frames. Yeah, start from the higher one, pick 2 or pick 1, and then go down to your time frame where you execute the trades. Again, the longer and the higher the time frame, the longer the trade will probably take. And the smaller, the quicker, right? And now we're looking to the past. Where are we? Huge moves. We're always leaving behind some support or demand zones. And we're right now in one, you see? Right one, the orange line. We are testing this area right here. Okay, let's go to the position right here. There are a few things I would expect from this situation. Again, this is a 10-minute chart, yeah? What I would expect is a touch in this area, and then either we will test the highs, or we'll do something and go even higher because we have different key areas here. Yeah, remember, the wicks tell you a lot. The wicks are most likely indications where smart money is opening or closing their positions to control the market. Let's see. Boom. We broke the highs and we took the highs out. See? Now the next question for you guys. What do you think from here? I do this a lot of times in my TikTok live streams. Which line will be hit first? I'm asking you. So, what do you say? The yellow or the blue one? This is not a guessing game. You should explain why. In my case, obviously, we are on a bearish trend. Everyone can see this. But there are always coming reversal points. What I learned with my experience is there are two different ways how it can reverse. Again, we learned passive entries, aggressive entries. We learned healthy trends, unhealthy trends. And now we're learning a fast sweep or a strong sweep or a safe sweep. Let's call it safe. A fast sweep is something like that. We are breaking structure and the price is dropping like a waterfall and then reverses immediately in the next minute or in the next 5 minutes. And the slow, strong or safe, however you want to call it, it's happening when the price is touching the same area multiple times, like it's like looking like we're building a small support or demand area or resistance area. For example, here, one touch, another touch, boom. Here, I need to zoom in, I think. You see, one touch, 2, 3, 4, low volume, and boom. Or low momentum is the right word. And what do we see here? It looks healthy. 1, 2, 3, and now you see a healthy move is starting. And because of that, I would tend that the blue line will most likely happen. We can still drop until this area here, but we will still reverse and touch this zone first before that one. Okay, let's see. And even if it drops, it's fine. Doesn't mean that this is nonsense. It just means the price is flowing differently. Now call me the king. Yeah? Do you see what I mean? This is again a one-tap video. And now for everyone. Sometimes maybe someone of you is confused, because there are always like people, unprofitable, envy people who try to drag down your name or whatever. Yeah, maybe everyone saw sometimes the cringe Twitter exposing of Greco. But the smart ones know it's always just nonsense, because it never makes any sense, right? People, but I think they don't want the whole community to be successful. It's easy to just spread some misinformation and fool the people around you in the industry. With YouTube videos, you monetize them, earn money with them. So be smart. You see how the game works. Just understand simple price action may be combined with a complex way of thinking. Because as you see, I never ever from the first video showed you just one setup. I'm always thinking in A and B or A, B, C. And then I'm looking at what the price action is doing to confirm which of my ideas is probably the right one. Again, We have the passive entry models, the aggressive entry models, healthy, unhealthy trends, fast sweep, and let's call it slow sweep, a safe sweep. On a fast sweep, a lot of times you don't have time to react, and there's only one key how to do it, but it is more risky. Let me delete the chart. Let's say this is the 1 minute chart and we're looking at the chart, okay? This is 1 minute. And now let's say you plan to go long, but you are not that sure. And the price is moving, breaking lows. And you're thinking, okay, maybe this is the right time to long, even though it looks super bearish in the 50 minute, 30 minute, but you want to catch the reversal. For the fast sweep, yeah, you can only do it most of the times when you're looking at the charts live, because then you can intentionally catch them. That's how I do it, and that's how I catch sometimes crazy trades, and they are not only one wrist reward, even way more than that. Because when you know you catch an extreme point, why just going with one wrist reward? Okay, but you see, it's dynamic. Yeah, people, or a lot of people, they think the key to trading is mechanical trading. Again, that's my opinion. I'm completely against it. I think dynamic trading, what I do, is the best and will be the best way of trading in human history. Yeah? Dynamically changing and adapting your risk management, your entry models, and your stop loss or TP. Some people only trade with fixed pip stop loss or TP. That's the most foolish thing I can think of. How can you just always use the fixed pip when the main thing is the market structure or how the market moves, the price action? As you saw in all the videos, I always first look where to put the stop loss, and then you can adjust your lot size, your risk you're going into. People say or ask me, how many pips you risk? Bro, what the fuck is that question, man? It always depends. So yeah, listen. How you catch the fast sweep is when you're looking live at the price and the price keeps moving, yeah, and creating, listen, one candle which is bigger than 10 to 15 candles. When you see such moves, and all of a sudden a big 1 minute candle happens, small wick, another one. Most of the times when you see that you are near of a important zone, this is the fast sweep, the manipulation where you should enter a sub. If you plan the whole trade accordingly and, for example, put your stop loss below, way below the previous structure point, because there are, again, two things which can happen. Either the price will just test it and check it and you're correct and you catch a crazy trade, or again it will break it. And what will happen after the break? Again, there are two options. Either we're pulling back in the area or we keep dropping. And now you say, wow, Greco, but that's not a 100% thing, bro. Exactly, you never know 100% what can happen. This is always probability, yeah, always. But you have to play with it. You have to learn in how many minutes or in what kind of time you expect a move to happen. Yeah, let's say the sweep right here. We're waiting and falling down slowly and boom, another huge candle. And you were just waiting for that candle because you know that is maybe the final sweep before it's going up. You're looking at previous key areas, and then you're deciding, what do you personally expect, bro, from that move? Will it be a healthy trend, a good reversal, or will the previous low in this case get swept, and maybe it will never stop falling, and you will get stopped out? But therefore you have your stop loss. Yeah, you calculate, you make your story, what do you expect. If you, for example, I say this is a 1 minute chart. So what does it mean? When this is a 1 minute chart and then boom, this move happens right here, I would expect the sweep within 5 minutes. And within 5 minutes, the trade, let's say, still sleeps here, I would close the trade. Even if it then keeps rising. And I'm not doing it all the time. Listen, again, this is dynamic trading. It means every situation is different, and you as a human, you as a person, you are the manager of what you expect. Nobody can tell you or teach you what you should always expect. At the end, it comes down to your own experience and your own way of thinking, right? The question, why would I close a trade earlier? I mean, you see it also on my MetaTrader screenshots, right? For example, yesterday, I had 15K. But when you looked closely, it was on Alpha Capital. When you looked closely, there were 4 banger trades. Yeah, each with multiple Ks. And if you look very closely, you would see there were 2 trades with only $400 in profit. And these were, for example, in that case, trades I closed earlier, because the price didn't do what I expected in a specific time. Because at the end, I am trading momentum, bro. If the momentum is gone, you can't hold on to a trade idea, or it will burn you. Okay? And you see, it can go way deeper, way more deeper. But this I will keep for another project, because it will literally be way too much. But in the next video, I will give you some real life experiences I got of my 2.5 years of trading. More ideas of how you can understand the momentum and the trend flow. Okay? See ya.